There are a lot of investors who would say that holding a stock for 1 to 2 years is considered long-term, but for many small-time investors, a year or two is just the start of the journey. Like what the famous Warren Buffett said, our favorite holding period is forever. Time is obviously an important aspect in investing. Hey, welcome to Stock Market Mate. Today, we'll talk about the 10 best stocks to buy and hold forever. If you're interested in the really long haul, then finish this video until the end so you can find your forever stock. Make sure to subscribe to the channel and hit that notification bell to help us beat the YouTube algorithm. If you're done with that, then let's get right into it. Starting off with stock number 10, Johnson & Johnson. This New Jersey-based healthcare and pharma giant is known as a dividend aristocrat. What even is that, you ask? Well, a dividend aristocrat is a company that pays you dividends for at least 25 years in a row without interruption. J&J did not just do that for 25 years, but for 58 years in a row. Just imagine how much the world has been through for 58 years, and this company is still standing. If that fact is not enough to convince you, then let's add more. J&J is also called the dividend darling of the investment community because it's one of the first ones around. And if you ask veteran investors about what their top 5 picks in dividend stocks are, Johnson & Johnson is definitely getting in the list, no doubt. A lot of people trust this company. It will have your back when you retire soon. From at least 1973 through 2021, Johnson & Johnson increased the value of its cash dividends every year. In 2021, it paid dividends of $4.19 per share, up from $3.98 per share in 2020. Obviously, companies like this can do really well, especially during times like these. If you buy the stock now, it will surely serve as a powerhouse of passive income. J&J actually has a dividend safety score of 99 and it is selling for a fair amount. This stock is not too volatile, so it's ideal to own. Stock number 9, Amazon. They say the stock is like the Terminator. The growth is impressive. Amazon.com Incorporated is one of the largest companies in the world. It is also a global leader in e-commerce and cloud computing. The company provides an online marketplace offering just about everything, including electronics, apparel, furniture, food, toys, and much more. It also offers video and music streaming services. Amazon's cloud service platform enables organizations to develop, build, and deploy online applications for a broad range of needs. For a company so big, it's inevitable for investors to wonder if it can keep on growing robustly and continue to handsomely reward shareholders. Indeed, it can. Online shopping continues to grow in popularity around the world, and people will always turn to Amazon for their needs. This is a very good stock to own for life, since we're sure that it is very unlikely for its e-commerce business to be dethroned. Amazon is the largest online retailer in the US and in the world. In fact, it has 188 such facilities outside of the US. It is very unlikely for an established company like Amazon to hit rock bottom, so you should really consider owning this stock and never intend to sell. Stock number 8, Tesla. 99% of the time, when a stock is hyped up, it fails. It tends to be overpriced only to end up stripping investors of the money they poured in. This is why Tesla is often overlooked by seasoned investors. But every once in a while, some of these overly hyped stocks do thrive. Basically, Tesla Incorporated designs, manufactures, and sells fully electric vehicles, solar products, energy storage solutions, and battery cells. So why should you keep a stock like Tesla? Well, this company is ideal to own since it presents strong deliveries growth and a meaningful improvement in profitability, despite a complex supply chain environment. The world's demands from this company remain robust, so it's definitely not going anywhere anytime soon. Unfortunately, Tesla sells for $570, which is slightly above fair value. However, even if you purchase it at this point, the returns will probably make up for it in the long run. All in all, there is a lot to look forward to from Tesla in the coming decade and beyond. As the company progresses on these fronts, its stock could rise further from here on. Stock number 7, Disney. From little kids to adults, everybody knows about Disney. Needless to say, everyone admires this company. The company operates in many different areas and posts strong numbers year after year. When you consider how old this company is, it is very impressive that it can still grow like a new company. Disney owns more than 100 TV channels all over the world. In the last 10 years, it increased its TV assets by 500%. Pretty much every business unit of Disney is highly profitable and posting strong growth. However, the stock is far from fair value and it sells for $170. Which is understandable since Disney never goes on sale and people don't even sell their stock at all. For that reason, we'll say that the company definitely knows what it is doing. It has an amazing brand name that's recognized by nearly anyone from age 2 to 100, and this company will be in our lives for a long time. If I could pick a stock and hold it forever, Disney would be very high on our list. Stock number 6, Alphabet. On the other end of the spectrum, we have Alphabet. Alphabet Incorporated, better known by its former name Google Incorporated, is a technology conglomerate that oversees a number of businesses, including the world's largest internet search and advertising service, the popular streaming video website YouTube, the Android mobile operating system, cloud storage services, and varied other growth ventures. Alphabet is one of the most successful stocks of the 21st century, launching at just over $50 a share in August 2004 before reaching a 2019 value of just over $1,125 Class A per share value. Despite its non-dividend paying status, investors of all stripes have flocked to Alphabet and helped transform it into a $660 billion company. Alphabet is arguably one of the best businesses from a long-term growth perspective, as well as from a durable competitive advantage perspective. Over the long term, the company's core businesses remain world-class growth opportunities for investors to jump on right now. Stock number 5. Facebook. This social media leader offers investors a world of potential, but how high can it go? By virtually every measure, Facebook is unstoppable now that the world transitions to digital. Facebook once reported a mind-boggling 59% improvement in ad sales in its third quarter, accounting for $6.8 billion of its $7 billion in total revenue. Facebook makes its money from ads. They show those ads to their users, and they also have plenty of other revenue streams like Instagram, WhatsApp, and the Oculus VR headset. Facebook also has Messenger and Facebook Marketplace, and they're even launching their very own cryptocurrency. And they're even creating something called the Metaverse. It's simply a digital reality that allows users to interact virtually. Facebook is already in both social media ad spend and usage, and it still manages to report stellar growth quarter in and quarter out. Facebook can not only maintain its phenomenal run, but it can also gain even more positive momentum in the months and years ahead. Stock number 4. Pfizer Incorporated. Most recently making a name for itself, in part because of its leading COVID-19 vaccine, PFE is a healthcare powerhouse that has what it takes to remain relevant in any market environment. The pandemic is a great example of this drug maker's innovative potential and existing blockbusters, including its Prevnar pneumonia vaccine, Ibrance breast cancer drug, and a Eliquis blood thinner, continue to power great long-term results. One thing that's certain in life is that we all grow old and get sick, so a company like Pfizer with a strong track record and impressive global scale is a great long-term bet for dividend investors who want to set it and forget it. Stock number 3. McDonald's Corp. An icon of the restaurant industry, MCD is also a case study in a company that knows how to drive long-term shareholder value. Its dividends has grown impressively over time, with more than 40 years running of at least one dividend increase per year. The size of those increases is significant too, with a payout of 61 cents in 2011 growing to more than double that at $1.29 per quarter now. While there's certainly a focus on healthier eating, the cost-conscious and always convenient menu of McDonald's continues to connect with consumers. And with recent expansion into delivery and loyalty programs, you can expect this stock to continue its track record of success for the foreseeable future. Stock number 2. CocaCola Incorporated. KO has long been a favorite of investing icon Warren Buffett, and for good reason. While sugary soft drinks may not be quite as popular as they once were in the age of more health-conscious consumers, Coke is not exactly hurting right now with its market value of more than $230 billion and revenue of roughly $40 billion annually worldwide. What's more, KO has looked beyond its flagship Coca-Cola soft drinks with juices, teas, and hydration products, including Powerade and Smart Water, to ensure it remains relevant for many years to come. It also boasts roughly 60 years of consecutive dividend increases under its belt as a sure sign to income-oriented investors that they'll keep getting rewarded if they remain the stock as a long-term holding. Stock number 1. Microsoft. Back to the tech space, Microsoft is our top pick for investors with a long-term growth orientation. This company was the third of its kind to reach the $1 trillion market capitalization level back in 2019. Since then, MSFT stock has more than doubled, now trading at a valuation of $2.25 trillion. Microsoft is one of the leaders in growing the cloud and infrastructure business. Today, this business provides much of the growth Microsoft enjoys. With a strong earnings base driven by the company's Windows and software businesses, Microsoft is certainly a company that can be categorized as a defensive growth stock. Interestingly, Microsoft is one of the few mega-cap tech names that pay a dividend and has for a very long time. While the yield is small, those who bought in a decade ago would now be enjoying an annual yield of nearly 10%. Accordingly, Microsoft is a top stock we think anyone can buy and hold for the very long term. Well, that's about everything. If you found this video helpful, kindly click the like and subscribe button. Also, you might want to leave a comment below. We love hearing from you. Thank you for watching, and we'll see you in the next video. If you enjoyed this video, you're going to want to watch one of these two videos right here. Enjoy!